Hello, I'm Lourdes Smits for the Finance News Network, and joining me from Fairview Equity Partners is Portfolio Manager Michael Glenane. Michael, welcome back to FNN.
Nice to be back.
What has been Fairview's performance since inception, and what have been some of your highlights?
Since inception, our fund has delivered 15.4% above the benchmark per annum after all fees. The benchmark, which is the Small Ordinaries Accumulation Index, has delivered about 2.7% per annum. Our inception now is about 6 years. It was actually October 2008, which is a very volatile time. As far as some of the highlights, one of them actually would be the healthcare sector over the last couple of years. We've managed to turn $42 million of retail investors' money into $72 million.
Okay, so looking closer at the health space, how important is the healthcare sector to the Small Ordinaries Index?
It's the 10th most important sector of the 25 sectors that we look at Fairview. It's got about 4% of the index weight, but interestingly, there's quite a few stocks that we don't look at, either they're too large or too small. There's a total of 121 stocks that are listed on the exchange which are healthcare denominated. We look at 48 of them.
So how much volatility do you see in the healthcare sector?
The healthcare sector is very volatile. You can see stocks lose 90% of their value in a year or go up many hundreds of fold. What happens is that stocks which come close to a clinical trial endpoint will either have a massive increase or a large decrease in value. Classic example over the last year, QRX. When Mox Duo was effectively knocked on the head at the FDA, which is the Food and Drug Administration in the United States, that stock lost over 90% of its value.
And what healthcare stocks does Fairview currently hold?
We hold 3 stocks at the moment: Alchemia, Mayne Pharma and Certex.
So what are the upcoming catalysts for these stocks?
Certainly. Firstly, for Alchemia, there's a phase 3 clinical trial result due in about 3 months' time. For Certex, there's a very important post-clinical trial study called the Surflock study that's due in March next year. And for Mayne Pharma, it's getting generic approvals from the FDA.
And Michael, what should investors pay attention to when assessing clinical trial results?
It's a very complex area. My first suggestion is read the announcement very carefully from the company, then read it again. Wait a bit and think about what really is mattering, what really matters here, because often you will see that the companies will put a positive spin on the trial results.
Okay, and Michael, have you sold out of any healthcare positions over the past year, and why did you sell?
We've sold out of 2 positions over the last year. Last December we sold out of Acrux. The market teaches you humility, that's one that we did get wrong. We sold out of Ramsay about 2 months ago, and the reason we sold that was it moved too high as far as was becoming too large, moved outside our index, so we had to sell it due to our investment mandates.
Now, Michael, one of Australia's largest private healthcare services, Healthscope, is set to list on the ASX. What value do you believe the company presents for investors?
We've had a good look at Healthscope. To us, it's an earlier version of Ramsay, which is a stock that's made us very good money over a number of years, and unfortunately we had to sell. With regard to Healthscope, it's a fair way behind Ramsay with its brownfield strategy, i.e. building more hospital beds and surgical theatres on-site the same site, as well as with regard to its procurement strategy. Healthscope is probably able to extract another 50 points per annum of basis points of margin simply on procurement and better buying. That's the reason to look at it very closely. The question is, what price should it trade at in its early days as a relisted vehicle? We would argue it should trade at a discount to Ramsay.
So Michael, what's the best advice you can give to investors looking to invest in the health space?
Investors are always paid to wait in healthcare. Don't rush, don't speculate. It's very important to make sure that you're looking at a stock for a number of years, because they have a long time before they gestate towards sales. Big value drivers are when they start towards that particular sales curve.
Michael Glenane, thank you for the update from Fairview Equity Partners.
Thank you very much.